Hello all, welcome to Stock Lovers TV. Today we are going to discuss on 5 stocks to buy on dip with massive discounts. In this video we are going to update targets and result analysis of the particular stocks and also the latest updates on the particular stock which we are discussing. Let's see in which sector we are seeing for today. It is IT sector. Let's not delay. We'll see why we want to invest in IT sector. In the last few years, especially during the COVID period, you all know that Indian IT sector has performed exceptionally well. Currently the Indian IT sector is contributing approximately 9% to the Indian GDP, and also Indian IT sector industry growth was like 15.5% year on year in like FY 2022 against the GDP against a growth rate of 8 to 9%. And also uh, to add on this, few more reasons why we want to invest in Indian IT companies are like India is the, as you all know, India is the largest sourcing destination, like which is serving about 59% of global sourcing market. And along with this, and one of the major reason is like increasing dollar value. As you all know, the India IT companies will do their transaction in dollars. So this increasing dollar value against INR will boost on the profit for the Indian IT sectors. And along with this, keep watching our video till the end. We'll be updating the few major disadvantage why we should not invest in IT sector. And let's see what and all stocks we are looking into IT sector like. And our first stock is like Tata Consultancy Services. It's also called as TCS. TCS is currently trading at 3,154 with the 52-week high of 4,446 and the 52-week low of 2,953. TCS is currently having the market cap of 1 lakh 11 lakh 20,950 crores with the stock PE value of 28.9 and ROC of 54.19%. And TCS is having the return on equity of 43.6%, which is massively good for the shareholders. And the little concern is like the book value. The book value is 244. TCS is current price of the TCS is trading 12 times higher than the book value. Now let's see the technical analysis of the stock TCS. Here you can see the chart of the TCS. Here, if you can see the TCS has reached the all-time high of 4,054, and it has currently trading at 3,154. Now the TCS is having the 50 DMA of 3,289 and the 200 DMA of 3,445. Currently, the TCS is sharing well below both the 50 and 200 DMA. If you can see the profit and loss for the quarters, here you can see the profit and loss of the quarters like sales. If you can see the sales in September 2019 quarter, the sales was like 38,977 crores. And now if you can see in June quarter, like the sales has been increased from 38,000 to 52,754. And also net profit also gradually increased from 8,000 to now it is 9,478. Along with this, we also see the year-on-year profit loss. In March 2011, the sales has been started with like 37,325 crores. Now the sales in March 2022, it is almost like 1,91,754 crores, which is a huge growth in the sales in a decade. And also like net profit, it started like in 2011 we had we can see the net profit like 9,068, and in March 2022 we can see the net profit of 38,327, which is a huge and benefited for the shareholders. If you can see the ratio who and all were holding the stocks, here you can see the shareholding pattern. In this stock, 72 percentage of the shares are holded by the promoters, which is a very good sign. It will be a benefit for the shareholders. And recently they had announced the buyback also at 4,500 rupees, which indicating the good growth in coming years in that TCS. And 13.5 percentage of shares are held by the FIS, and 8.36 percentage is held by DIS, and 5.8 percentage of the stocks is held by public. Along with information, we will be summarizing with a few pros and cons on TCS. Here, if you can see we'll start with the concerns, the one, as I already mentioned, the stock concern is like the book value. The book value is 244, that which is like stock is trading 12.58 times of its book value. And also it is showing the poor sales growth of 10.2 percentage over last 5 years. That is one of the concerns. And also along with this, TCS is facing the massive attrition rate. That also one of the concerns of the stock. And if you can see the pros, the company is almost debt free, and it is providing the return on equity of 34%, which is a very good and huge for the shareholders. And also the benefits like increasing dollar value will also boost up the profits. Next stock. Here the next stock we are seeing is like Infosys Limited. It is the second most major IT giant in India. The Infosys is having the market cap of 626,000 crores, with the stock PE value of 28.5 and ROC of 37%, and return on equity is of 29%. And if you can see, the Infosys is currently trading at 1494, and with the 52-week high of 1954 and 52-week low of 1367. The Infosys is having the book value of the 179, which is a little worry because of the Infosys share is trading 8 times the book value. Let's see the technical analysis of this Infosys stock. Here you can see the chart for the Infosys, and the stock has traded all-time high of 1,900, and now the stock is trading at 1,494. The stock is having the 50 DMA value of 1,498 and 200 DMA of 1,596. The stock is well trading below both 50 and 200 DMA. And now we are seeing the quarterly results, and the quarterly results, the sales has been drastically increased from 21,803 to now that sales is to 32,276, and the net profit has been grown from 3,798 to 5,686. If you can see year on year, the sales has been growth from 27,000 since 2011. Now the sales is almost 1 lakh to 21,641. It is massive, five times the sales has been increased 5 times in a decade. And also the net profit, commonly if sales has been increased, net profit also drastically increased from 6,835 to now the net profit is to 22,110 crores. If you can see the shareholding pattern, the promoters are holding 13% of the shares, and FIIs are holding 33%, and DIs are holding 17%, and public is holding 36% of the shareholdings. Along with information, we'll be summarizing the stock with some few of the pros and cons. Few of the concerns of the stock is stock is trading at 8 times of its book value. Promoter holding is less, and pros are company is almost debt free, and it is providing the ROE of 27.24%. And the next stock in our list is like Mindtree Limited. If you can see that Mindtree is having the share market value of 48,922 and the stock PE of 27.5 and the ROCE of 41.5%, and also like the Mindtree stock is having the ROE of return on equity is 33%, which is good, and the book value is only 349 rupees, like which is the stock is trading at 8 times the book value, which is the major concern for the stock. And the stock is currently trading at 3,118 with a 52-week high of 5,060 and a 52-week low of 22,649. Now, if you can see the charts of the Mindtree, the stock has reached the all-time high of that 5,176, and now the stock is trading currently at 3,118, and the stock is having the 50 DMA of 3,040 and 200 DMA of 3,438. Like the stock is trading well above 50 DMA and well below 200 DMA. If you can see the profit and loss, the sales has been increased, like it is 1,509, that now has been like in March 2022 it has been increased to 10,525, and also like the profit has been increased from 100 crores to now it is 16 it is 1653 crores. Now if you can see the ratios, the shareholding pattern, the promoters are holding, like in June 2022 the promoters are holding 61%, approximately 61 percentage of the shares, and FIs are holding 11%, and DIs are holding 12% of shares, and public are holding 15 percentage out of 100 percentage. If you can see, as I already discussed, the Mindtree is having the few pros and cons, like the stock is almost completely debt free, and it is having the return on equity of 33%. The pros are like that stock is trading 8 times the book value, and euro depreciation is one of the reason. Next in our list we have the WIPRO Limited. If you can see, the WIPRO is having the market cap of 225,000 for 435 crores, and with the stock PE of 18.5. The WIPRO stock is having the ROCE of 21% with the return on equity of 20%. Currently, with the WIPRO trading at 411 with the 52-week low of 740 and 52-week low of 391. If you can see the chart, WIPRO has fallen from high of 711. Now now currently the WIPRO is trading at 411 with the 50 DMA value of 443 and 200 DMA value of 521. The stock is trading well below both 50 DMA and 200 DMA. We can see the quarterly results, like in June 2019 the sales was like 14,786 crores. Now in March 2022 the sales is like 20,861 crores, and also the net profit, and net profit has been increased from 2,000 to 3,000, which is fairly decent. And if you can see the investors in this shareholding pattern, in WIPRO, the promoters are holding like 73% of the shares, and FIs are having 6.9%, and the DIs are having this 3.43 percentage, and the public is holding 16 percentage of the stocks. Like if you can see, the promoters are holding the major like 70 approximately 73%. It is a very good benefit for them. And also like we'll summarize with the good pros and cons. Like the WIPRO is as we all see here, WIPRO is posting the poor sales growth, and book value is also like the stock is trading 4 times the book value. These are the few pros for the stocks. And At last, our stock pick is like Larsen and Toubro in Infotech, like L&T Infotech. If you can see, the L&T Infotech is having the market cap of 77,000 crores and the stock PE of 32%, 32 points, and the ROC is of 35% and ROE of like return on the equity is 28%. The share is currently trading at 4,444 and with the high of 7,595 and the low of 3,733. Here, if you can see the chart, the stock has been reached almost 777 all-time high. Now, currently, the stock is trading at 4,444 with 50 DMA of like 4,294 and 5,637 with 200 DMA. Like both the stock is currently trading well above like 50 DMA and below 200 DMA. And if you can see the profit of this year-on-year profit in 2012, the stock sales was the sales has been from increasing from 3,182 to 15,669, which is almost five times the sales has been growth in a decade. And also like net profit from 419 crores to now it is almost 2,297, which is fairly decent. We can see that shareholding pattern like here also like L&T Infotech, the promoters are holding 74%, which is massive, and also like DIS are holding 8% and FIS are also holding 8.4% and public is holding 9.41%. Along with this, we also highlight few of the disadvantages in IT sector what we are seeing presently. The main and major disadvantage is like the attrition rate in all each of the company like from TCS, Infosys, Mindtree, WIPRO, we are seeing like a minimum of 14% to 25 percentage of attrition rate. Because of this attrition, the IT companies, these IT companies are hiring the freshers and they're training them. The training cost will included in the profit, removed from the profits, and also to make them productive, it will almost take 1 to 1.5 years. With this, the IT, these expenses are causing losses to the IT companies. Attrition is the one of the major reasons, and also like euro depreciation. As you all know, because of this Russia-Ukraine war, the euro value is getting depreciated against the USD INR. Like it is almost 82 points. So as all of these Indian IT companies are getting 35 percentage of contribution from the European nations, this depreciating euro is also a major drawback for the major disadvantage in the profit of the IT stocks. So these these are not the investment advice. Please do your analysis before investing. Thanks for watching Stock Lovers TV. Please subscribe, like our video. Thank you.